Hi folks, this is Craig, the options linebacker, and this is the weekend report for Saturday, September 12th. I'm going to start out this weekend's analysis on the S&P 500 monthly and weekly charts because there's two different signals here that are giving conflicting reads. Looking at the monthly chart, the harder something goes down, the faster it's going to bounce up. And it's bounced up in the middle of the 7th straight month here. But this blue line is the trend line that's connected all of the previous lows all the way back to the early 90s, and it's butting right up against this trend line. We can tell that in the month of August, actually, it had a little trouble getting up to that trend line and breaking out above it. So now it's making a second attempt here around S&P 1042 to get through that trend line, but it's having a little bit of overhead resistance right now. So the question is this trend line in play? We don't know quite yet. Now on the monthly chart, it's not going to come up to this thing to the tick. Sometimes it'll bleed over just a little bit. The larger the time frame, the less precise the signals can be. Looking at the weekly chart though, I get a completely different read on this particular market. What you can see is these pivots that we have. So this is a 1, 2, 3 pivot as it broke down below 1200, and the most recent pivot, which was started by the crash, is right around 1120 or so, and that lines up with that 50% fib of the entire bear market. I talked about this last week a little bit, that most significant bear markets, the first thing that they'll do is they'll bottom off and they'll run up 50% to the 50% fib of that rally of the bear market. So that's around 1121 on the S&Ps. That would also be consistent with coming up to retest this descending trend line, which has held all of the significant highs in the bear market. Now, the other thing to notice here is that these 2 weeks that we had in early October really didn't create any overhead resistance. This is more of an air pocket. So what you'll find is that markets have a strong tendency that once they get above all of this chop in this overhead supply, there's no overhead resistance here. There's no overhead supply up in this area. So markets are free to zoom to the upside. So this is why I'm seeing two different reads depending on whether I look at the monthly chart or the weekly chart. And this area that's up in here, I would say, drawn by this blue area, this represents kind of this air pocket that I'm talking about. So it wouldn't surprise me in the least to see price do kind of like a final zoom back up to retest that area. Now let's go down to the daily chart and see if we can see anything here. So after the big move up in July, the one thing that I was looking for was some type of consolidation pattern that would come along in this area, and I was expecting at least something to drift down and consolidate for a while. Unfortunately, I think this may be it. So for the past month, this is the only consolidation we're going to get because it looks like we've broken out above this area, and my ADX indicators are indicating that the trend is kicking in yet again. The other thing that we're seeing here is that after all of the bearish divergence, so as the price has made higher highs, the MACD histogram has made lower highs on here. Now we're making higher highs on the MACD histogram to go along with higher prices. So the momentum has kicked it into gear yet again. Now what you find is with the Bollinger Bands, the price is pretty close to the top Bollinger Band here. And what we find is if the price closes outside of the bands, what that means is that's kind of a signal to say price has gone a little bit too far, too fast, and needs to kind of come back in. You can think of them again as the ropes around a boxing ring. It tends to keep the boxers inside of it. But on the other hand, what can happen is similar to what we saw in July, where the price can keep pushing the bands back up into this area until it's time to consolidate for the next time. So again, I think this week is going to be really key to see whether or not we consolidate in place for a few days or whether the price just starts pushing itself up. It's hard to imagine that we still have a lot of shorts to squeeze to the upside at this point, but anything can happen. Now a couple of things to bring your attention to as we look at the daily chart of the S&P 500. This is just a different look of it. There's an ascending trend line that's been in place now for several months that's contained all of the recent highs. So the next touch would be just north of 1050 on the S&P. Now, I've seen price completely blow through these upper trend lines, so there's nothing necessarily magic about an upper trend line in an ascending wedge. Sometimes if the market herd determines that they have to chase after the price because this is the last bull market that's ever going to be, something like that, it's hard to know what goes through their minds, but this is what occurs to kind of get into that buying panic, that buying frenzy that typically leads up to a blow off top where it kind of ends poorly. But the point here is we do have an ascending trend line that has been tested several times and is still in place. So we will watch that carefully over the next week to see if 1050, 1055 comes into play. Now, while I've got this chart up, I'll show my October Iron Condor. We have a credit spread position down here on the spiders, which we got when the price sold down to here. So this is a nice entry, and the price has done nothing but run away from this. So we put our topside position on here in the spiders when the price ran up to resistance at this point. So we tend to get filled as we sell into weakness at support, and we tend to get filled on bear call spreads as we sell into strength at resistance. We also have a couple of defensive butterflies in the way as well too, which will come in handy if the price runs into the middle of the butterfly by October expiration. And this is my Russell chart. You can see the Russell chart has now made it up to that 50% retracement of the bear market. So just like the NASDAQ, the Russell has now made it up to that 50% level. We have a one position left in September. It's a call or a put spread down here and way out of the money with a big wide defensive butterfly in place. So if the price does decide to start crashing down here, we have a nice defensive trade in the way so we can actually make money as this trade is being attacked. Some of the other trades we look at are swing trades, which are short-term directional opportunities. So as I talked about last week, I'm going to be looking for the next dip in the market to buy, and as the RSI2 gets below 2.0, that becomes a long signal. Something else that we started with this cycle was another swing strategy, which is called the double 7 strategy. So I've got this on an automated trade station strategy, tells me when to buy and sell, and as you can see, all of the candidates on this swing got into the act and made some nice signals. So we're going to be going through our ETF candidates and screening those a little further and looking for the next dip in the market to be able to participate in this strategy. So we have September options expiration coming up in a week. Next week's edition, I'll go over the September results that we had and the trades that we did and why we did them. Hope to see you then. Have a good week, folks.